Okay, welcome everyone. We'll start our lesson 3. Today lesson will go through LO3. As you know me, my name is Anju. If you have any question, drop me an email anju@university.co.uk. I'll try my best to get back to you as soon as possible. And if any other question you have, please drop email admin@university.co.uk. And today lesson will go through LO3. So during our last two lessons, we had a discussion about what is assurance, what is meant by assurance engagement. We had a discussion about last lesson, internal control, why control is important. Control means corrective action, how we can take and why is it crucial. That all was in our previous lesson. And today lesson will be our LO3. And then we'll start. Okay, let's begin. Anyone, any question if you have, please, regarding any previous lesson, any point you'd like to discuss or you want to ask, so please feel free, always ask. Okay, so LO3 is about understand how gathered evidence when completing an assurance engagement. Always good to be look and reflect, what we know about internal control and assurance. Quick reflection. Today lesson will go through assurance process. We'll discuss about assurance planning. We'll discuss how we can collect the evidence and how this can assist, editors to give and draw the conclusion and give the views and assurance accordingly. Different stages and requirement in planning, collecting evidence. Evidence is very crucial. So always when you do the sampling and look around these, evidence, those appropriate, you draw the opinion or not. Okay, review and the reporting technique, qualification reports, impact on legal requirement. Legal requirement is a lot of, the legal requirement because after the Enron scandal, which is raised, many concern, the information which is the editor draw their opinion. Those are sometimes not based on the factual information and not fulfill the uh, international standard and assurance audit standard. So these are, this quite, question mark why the company was on $300+ shares, and certainly within few months time it dropped down to 10 to 15 cent a dollar, 15 cent shares instead of $300 shares in a short space of time. So the reporting and the evidence, those. So today lesson we have three criteria: discuss the reasons of reporting, documentation regarding the assurance engagement, describe the different stages required, gather evidence, and review different, the method or the evidence of assurance engagement. That's, key, which we'll go through and then. Okay, so as we discussed in one or two previous lessons as well, an assurance engagement, which is, of course, we can look around giving practitioner account and express and draw the conclusion designed to enhance the degree of the confidence that the intended user or responsible party outcome of the evaluation measurement of the subject matter against the criteria. So we already had a discussion. Editor never gives absolute assurance. Editor can give the reasonable assurance or limited assurance. So reasonable is a high level of assurance, limited overall the level of assurance, that responsible assurance stated negatively. So we can look around the editors give the never give the absolute assurance. So inherently limitation, subjective judgment. Directors may not give the information that editors need, so the editor can rely that whatever the information and sampling evidence is persuasive, not conclusive. So that can be the look for details and audit and the type of assurance engagement that's carried out by editors to give independent opinion. So there is also is a question mark: independent, free from errors, free from bias. meet the objectivity of the audit. That's the quite assurance. So we can look around, is it the company actually in the requirement one of the legislation? Because Company Act 2006, that's all the companies have to be and audited. Those are public limited and with the turnover. Small company turnover less than 10.2, asset is 5.1, implies less than. If it's a greater than, they have to do audit, and the dominant listed entities, bank, insurance companies, whether the standard alone or the part of the group, cannot be example even. So we can look around the details. It is required to produce the reports to shareholders. This express the opinion whether the financial statement prepared accordingly, the framework prepared according, and give the true and fair information. So that's the key emphasis on true and fair. So that's we can look around accountability, which is covered the issue discussed under the corporate governance. Corporate governance mean how the company govern and run. That's also quite crucial, which we need to be look around meeting the requirement of the governance mean how the company will control and run. Assurance provision communication is a crucial. We have a good communication in place between directors, encourage communication with the shareholder, director base, going concern. Going concern is the term we'll carry on using in financial statement, and as a company, as an entity, going concern principle, the business will carry on as a normal activity for unseenable future, unlimited, because we according to our observation not going to be closed in few months or few days or the companies. uh, so that is the crucial going concern. The management of risk. Risk is the probability, and you have to manage the risk. We can't 100% eliminate the risk, but we editors can give their opinion. Like, if they have an internal control system, the risk can be minimized. If they have a insurance in place, that's, minimize the risk toward the business. So we can look around. Assurance engagement, the professional accountant, evaluators, we can look around, we can evaluate the major matters and the basis of the suitability criteria. Editors express their opinion and give their opinions, and that's, it's quite. Nature of the assurance can be statutory and non-statutory. Statutory by law, you have to it's not by law required, but want to be more degree of assurance. We want to give the purpose of the audit to gain the opinion and the financial statements solely reported to the shareholders. We need to be looking at stakeholders' interest as well. Secretary audit requirement, Company Act, and non-secretary auditors can give the opinion of other financial statements. We can look around the cash flow. We can look around the CSR, corporate social responsibility reporting, sustainability reporting, the notes and all, so we can look around set of account, partnership accounts is acceptable to the tax authority, the soul of the sale of the business are within the group, negotiation of the loans. These, the points can we and the details can give the assurance about. Okay, describe the different stages required. Evidence, when we're looking the review and the evidence we need to be, why is the review need to be done? Review audit give you a high level of assurance. State, that anything if it come under details attention that need to be highlighted. Focus on the materiality. What is meant by material? Materiality means significant. If anything is significant, the transaction, not why we showing off the balance sheet. It should be on the balance sheet or on the financial statement. Accounts may not give the truth. It should be given the information about why not, what is missing, why the asset did not be revalued, what the company policies, what are the in the notes, clearly need to be explained, or which accounting standard we follow, how we revise, which costing method, or the valuation of inventory method. If you change something, you have to previous year account need to be recalculated. So internal audit, why it's done, employed by the organization, part of internal control responsibility of management. I'll help, Other, we can look around truth and fairness, of course, a detailed opinion always need to be true and fair, is a factual, is free from bias, reflect the commercial substance, of the transaction, and not opinion about absolute correctness. Obtain the evidence on the test basis only. Like, we have tested 10% of the asset, non-current asset register. We found the depreciation of the asset being done. We found the asset is owned by the company. We have a documentary evidence. We went through to see the physical asset, 1 or 2% of the asset, which we found are correct. On the basis of these, we are drawing the RFP. Yeah, that's, maybe we can draw the opinion that, the asset revaluation not consistently adopt in the light of the accounting standard. So that can be a details given. Cannot be absolute assurance due to the inherently limitations. What are the limitations? Audit is not the objective, is the judgment have to be made. Audit is reports is inherently limitation. We discuss about risk, audit risk, inherent risk, control risk. That can be audit planning, if we not do it, it can be itself risk. So audit reports is issued a long time and after the balance sheet date. Audit is evidence, something which is indicate what is possible or not, which we need to be accounting financial statement prepared within 90 days. Otherwise, its substances can be less, because of course things are changed. Limitation accounting and control system. Assurance materiality, which we mentioned earlier, materiality means the significant, all the significant transactions, those are within the financial statement. Material is omissions or misstatement influence their decisions, of course, huge. They will put, like Tesco 180 million, the sales, but shown 220 million. That can be influence on who invested or others, the stakeholder. So which is not acceptable mathematically. We need to be qualitative, quantitative, expect within that, the numbers and explanation and the justification. Determined by the nature and procedures, auditors, reasonable assurance reviewed, agreed upon, and uh, complied the report or completion of the report. That's also quite crucial, which we need to be. Then 3.4, discuss the issues from the gathering assurance evidence. Audit acceptance, planning, risk materiality, the nature of the work and the timing is very important. The timely things that happen, reporting system within the organization, those are existing and the company prepared and we check our internally controlled, substantive and compliant testing and the statement of financial position. Audit, because the financial position is a historical figure. So we can go when the asset was bought, what was the depreciation method, is you straight line diminishing, or is you using 1 year straight line, next year diminishing. It means it can asset value can be different, which not reflect the true and fair. That's which we need to be. Audit completion, including going concern, analytical procedure, reporting and audit acceptance and annual cycle of it. Anybody any question, please? Feel free, carry on asking if you have. Okay, so responding to the risk audit, which we can look around the response to the risk overall, the further audit procedure, test of control, audit plan, substantial analytical procedure, sufficient appropriate evidence in their audit that need to be. Test of control, this already been dealt. Well, of course, this slide came from the BPP. That's the refer to the chapters which we have the handouts and design, an operating system, role of the controlling, testing, auditor, assessment, risk, materiality misstatement, control effectively need to be in place, test of control. Oh yes, let me show me how you raise the purchase order, who raised the invoices, who's when the payment, who's going to be received and add, in the cash book and the how often we do the reconciliation. So these are all we can look around. Those are appropriate, in place or not. Substantial procedure, the editor are seeking to be substantial as the assertion, which we can known as the financial statement assertion regarding the transaction, events and all. So when we looking these, the assertion, the classified transaction, events and recorded. So it need to be occurrence in the complete accuracy, cut-off date, classification. Asset should be classified under asset. It's not the expense, revenue and capital. Revenue is the expense which is goes in the profit and loss, and the capital expense can be capitalized under the asset, which we need to be presentation. So about the accounting balance related to the disclosures at the period, existence, right, obligation, completeness, accuracy, valuation, allocation, classification, and these all we need to be do a section. We need to be make sure those are appropriate, So in a analytical procedure, inquiry, external confirmation, inspection, observation, recalculation, and performance, these editors can draw and build the understanding about and then draw the opinion accordingly. So in analytical procedure, the relationship between the term of the data and the information, in analytical procedure, information of the previous period, anticipate the result, budgets or industry averages and all, which we can look around. Think about when we're looking, risk assessment must be used that, the procedures. Is it reliable? Is it relevant? Is it available, the information, suitable criteria? Respondent to the risk of audit. Overall, we can look around analytical procedure must be used to ensure the financial statement is the reasonable and the final review, which we can look on. Practical techniques can be used. Accounting ratios, like looking the ratios, drawing the opinion, profit margin, return on capital employed, current asset ratio, gearing ratios, all these, inventories are receivable days, payable days. So these are all loan against expense, those all we can look around what's happened, what impact is on organization of these. Editors make inquiry of directors considered. Sometimes editors can use the third party evidence and the reference from, and we can review. So that's, which we can look around. Then we can look around. Sampling is also important. Tolerance, sampling level. We can't really, but up to, if it's the 2% of the big company, the missing is fine. It's not that material. Different sampling techniques, it's called probability, non-probability. Consider the risk and the expectation. We can look around the misstatement, acceptance, selection, random or systematic, or that can be a detailed must analyze misstatement. Qualitative and quantitative aspects that need to be considered within the computer aided techniques can be used, the account audit software to check and match things in comparison. And nowadays, of course, AI can play the key role, blockchain, and we can look around checking the whether the system is operating properly, freedom at the data is not be anyone can alter the data. What is the policy we have, so we can look around, integrate the test facilities, permanent testing environment, and also we have audit evidence under ISA, which is International Standard and Assurance, which we can look on. 500 sufficient appropriate audit evidence. Audit evidence needs sufficient appropriate audit evidence to draw the conclusion. Objectivity, express the opinion, why we doing it, and audit evidence information obtained, to arrive the conclusion for the reports and evidence can be informed. Test of control are the substantial procedure, including the test, which we can look around the classes of transactions, we can look around the policies and disclosures. All we need to look around. Okay, financial statement assertions. We can look around the representation made by the director, appropriate, the statement. We can look around the transaction and the events for the period under occurrence is there. The complete accuracy cutoff dates are the measures of the segregation of duties can be accounting balance for the period, existent right, obligation, who is on it. Yes, complete of the asset being revalued and their values correct date, what is happening and what the procedures being used. So we can look around presentation and disclosures, rights and obligations. So these are all, the details can use these tests to look around and draw their P. Okay, audit evidence is the procedures and inspection, the assets, inspection of the document and observations can be used by editors. And then, of course, different computer software we can use it to analyze. It's that can be, and the control of the document, that is very crucial. Look around and not nobody else is the information. Introduction to audit sampling. Sampling is, of course, population is being checking, like a census is the census data is mean we are counting every individual, but the sampling means the small proportion of the population. We can use it, the sample size, and that's, based on. So we can need to be, it's quite a resilient system need to be in place. High right risk, if you just 2% not represent whole, and what are the criteria being used to test it? You may be looking one off is where you have the companies, 100 offices, you just, pick. There are many countries, you can't do audit of all, but you can pick some samples of it. Important audit work performed, enable, the partner to review the adequate work is performed. We can look around IS 230, which is about the audit documentation. We can look around the numbering. We can look around authorization, sufficient appropriate audit evidence, test of control procedures evidence, reliability of these evidence, audit testing, and the fulfill assertion. We can less than 100% evidence is usually obtained, which we can look around, and all the audit work must be obtained. So these, and we pick from some of our is quite good, look around the audit, evidence, sufficient, appropriate, relevant, reliable. Yeah. So this little timing of it, sampling being and the technique which we use. Okay, then the merit criteria is written, representation of the statement which can be look around under IES 580 of the standard. The purpose of obtaining evidence, this form of evidence is twofold. Obtain the representation, the management and those, charged with the governance has fulfilled their responsibility, preparation, financial statement. We need to be look around. We can look around the providing the details with the relevant information. We can look around regarding the transaction and reflecting them and support with the audit evidence. That's, which we can, that's, plan and the intention or the fact, the carrying value of the asset and the liability. So what is meant by carrying value? Carrying value means the cost minus accumulated depreciation of the previous year is equal to carrying value of the asset. So we can look around contingent liability. What is, we have a IS 36 a provision and that. So contingent mean like we have a case in the court and we expecting more than 50% probability we lose the case, and we can create, the liability in the book of accounts because that is a liability to settle in future. So that's, true and fair information under the standard which we can. The formal confirmation of the directed judgment issues, that's, the previous notes also. Impairment of asset, what is impairment mean? Is mean reducing the asset being checking. We can do asset impair, we can, whichever is, if the asset at cost, assets economics value or value in use, if, and the book value, if the asset is being lower than that, so asset need to be impaired. So we can look around like if you have a Windows 98 CDs in your warehouse, so you have Windows 98, but what is the value of Windows 98? Maybe you bought £300 and current in the my value in use is only £10, or you can sell it, you can generate, 10. So like if you're a printer you have, so photocopiers, maybe you bought it 3,000, but know that the value of printer in your book of account, you kept it. Maybe you bought it 10,000, no is the value, you wrote it 5,000, but the value of the print we can gain it, maybe the value in use is only 3,000, but if we want to sell it, the machine, we can sell it still is 4,000. So instead of value in use, so whichever is a higher value we can use, then we can look in the what is the carrying value. We can impair our asset and we can say this value should be used in the book of account. So that's, we can look around the standard accounts. If you want, we can go through some more examples. How can written representation from obtain and details can team will be list of evidence we can wrote to the bank, we can wrote to the third party, we can collect the document and the letters, and then of course, we can collect the evidence from and the management, and we can based on we can draw the conclusion. Okay, so quality and reliability is very important under IS 580, which we can clearly state the representation. We can look around the evidence, how much is reliable, if you're getting the evidence from the bank, if you're getting the evidence from a third party, if your evidence is from, so you look the reliability of and feasibility of that, so that's inconsistency with the forms, look around the complete integrity, ethical values being followed. People have a CPDs and they know about the new standard, they have been updated. So then of course it's the evidence can. So we can look around all the opinion, those in being draw that conclusion properly. Okay, additional matters required, representation. Maybe we can director assess the risk, the fraud. Maybe director itself involved in the fraud, like a pension fund, where the money deducted, where we invested, what document. It's not being your own subsidiary company you invested, conflict or uncorrected, misstatement and immaterial, all the material information should be. Then we can look around 3D. Always good to be work toward the extension criteria where we can look around audit financial statement. We can do the risk assessment report, reliability comport, computer aided techniques, can be used. So sources of evidence, steps of control, substantial procedures. We can look around the data computer test data, audit software with the computer are the good at are calculating, sorting, filtering, reporting, exceptions. These are all is good to be, and we can add, some examples for the distinction criteria for that. Okay, so these are some extra links, please, if you want to read from, or you can look around today lessons, which is the chapter of the book today. We audit engagement and then audit evidence, the key focus to the lesson. And that's all about from me. Anyone, any question? Yes, no. So please, if you looking yourself audit engagement, to that if you write the word Kaplan. So Kaplan is a publisher. You can find, yes, a lot of stuff, on through the Kaplan resource bank. Yes, that give you, and you've been given here the professional accountant, how we can promote general principles. Then you look the accepting audit and engagement. Yes, so different, the standard for the refer being engagement letters, IES 2 to 10 agreeing on the term and condition. Those were being in the on the basis of this, And then of course ethics side as a appointment of details in engagement, that's also can be contextualized and what is assurance. All these, is quite good resources really you can, and some being links are given in your in these slides and for the reading to enhance your understanding. So that's all from my end. In the next lesson, we look our next elements, and please, if you have any questions, feel free to ask them. Okay, so today we look around the test of control. We discuss about audit assurance and risk and evidence. Okay, so next lesson we look around our next hello. Any question, please? Yes, no, no.
Oh, thank you.
Okay, so please, it's good to be before our next lesson. We can look around our next LO, which that will help you to enhance, and we go through the key term, and the next week, which we look our LO4, and under the indicative content unit specification is good to look around before you further read. Would like to, if you like to ask, any question, you can as well. Thanks for attending. Have a lovely weekend. Enjoy weather. Hope I will speak to you during our next lesson then.
Thank you. You too.
Thank you. Bye-bye.
Bye-bye.
Thank you. Bye.
Thank you. Bye.